Welcome back, guys. I want to show you a trade I had today on CADL Therapeutics, CADL. This thing went from $4 all the way to $14 in a matter of a few minutes. And so whenever you see this happening, you can bet there's going to be a lot of eyes on this stock, and there's going to be some opportunity that we can hopefully take advantage of. So let me show you how I traded it and how I determine what direction to trade it in. The first thing I want to look at is some of the internals of the company. I like to understand what the catalyst is. And this morning, CADL Therapeutics it's a biotech company. They came out with news that they had a positive result on their phase 3 cancer drug trial. So that's the main catalyst. The next thing I look for is the float size. So this thing has 20 million share float, which is a low float stock, but it's not an ultra low float like we've seen before in some other stocks that are like less than a million shares. And those things can go from like $4 to $50. And there can be liquidity issues. So with a 20 million share float, yeah, even though it's low, there's probably going to be plenty of shares available to get in and out, no problem. And it's probably going to prevent the stock from doing anything absolutely crazy like we've seen before on some of those ultra low floats. So we've got our catalyst, we understand our float. The next thing I do is I take a look at the daily chart. So you can see that earlier this year, there was a pretty good move from $1 up to $14. And then the rest of the year, it really just kind of faded off. So we're trying to determine what direction to trade this stock in. And we need to understand who's in control. So are the bears in control, or are the bulls in control? So looking at this daily chart, for most of the year, yeah, the bulls had a good run in April and May, but for the rest of the year, it just kind of faded off. And so you got to think that a lot of these guys who bought in the $9, $10, $11, $13 areas, they're going to be feeling some pain as they're down probably 50, maybe 70% on their investments. So we got to keep that in mind. And when any spikes come, what do you think they're going to be thinking? They're probably going to want to sell out of their position, and at least they're going to break even and get out of these unrealized losses that they've been dealing with all year. So there's likely going to be some selling pressure right at the open. So what we need to do as traders is determine who's going to be in control. And once we understand that, we can pick a direction to trade it in. So pre-market, I don't know if I'm going to trade this long or short. It really just depends on how it opens and who's showing me that they're in control. So pre-market, yeah, we went up to the $14 area, and then we're just kind of consolidating in that $10 to $13 area. So I want to see how it opens, and I want to see who's in control before I join in. So right out of the gate, the stock opens up and halts with this move from 1250 all the way up to 1390. So anytime a stock moves up or down over 10% within a 5-minute period, NASDAQ will halt it and kind of give everybody a chance to just cool off. And it's their way of protecting investors so that there aren't these crazy spikes. So it halts for 5 minutes, and then we just kind of consolidate. We're still not comfortable with any trades. The bull case is, if we're going to trade this long, we want to see it break over these 52-week highs, pre-market and 52-week highs over 1430. And we want to see it confirm that it's going to hold above that area. But as you'll see, we get this spike right over the 52-week highs, and then the bears take over and slap it right back under. So that's a big tell that oh, the bulls aren't as strong as maybe we thought they were. And then we see another signal that the bears are really in control when you see what I like to call a kill candle. So the bulls are holding it up over the 9 EMA right out of the gate for the first 10-15 minutes. And then the bears slap it down right under and bring it right back down to VWAP. And we halt to the downside. So I'm thinking, well, the bears are most likely in control because the bulls couldn't push it over the 52-week highs and they couldn't keep it up over the pre-market high area. So I took an entry in the low 12s, and the first thing I do when I take an entry is I set a stop. So where am I risking to? In this particular case, my idea was that, well, we've got our kill candle, and price would not likely move back above there. And if it did, then I'm probably wrong on the trade. So I was comfortable risking to the 1360s, 1370 area. Yes, it's a little bit wider stop than I normally like to have, but I thought the risk was worth the potential reward. So the first thing I do is I set my stop. And then the second thing I do is I look to where I can add to the position. So this VWAP area is really, it's a key area because I view it as a sentiment indicator. Anything above VWAP is more bullish and anything below is more bearish. So yes, we price dropped to the VWAP area. And then as you can see, it really was weak on that 1230s, 1270s area. So I took another entry, added to the position, again in the low 12s, and then I started to move my stop down to protect my downside risk. And then ultimately I added a third position as we broke below VWAP. To me, at this point, the bears are completely in control, and I'm feeling very confident that I'm going to be right on the direction of the trade. So I'm in full size here. In my average position is probably, I think I was in the 1190s. And then really I'm just trying to manage the trade and get as much out of it as I possibly could. So on the initial entry, I was risking about $1.50. Then once I was in full size, I bring my stop down to just above these recent highs. So now I'm only risking $1 per share. And in order for it to make sense to me, I need to make at least $2 per share, hopefully. And let's see if we can get that. So price was just really heavy after we got under VWAP. We couldn't break above the 9 EMA again. So no reason to cover any shares until you get a really good move back to your down to your target price. So once we got down to around the low 10s, I thought, okay, now it's time to start covering some shares. So I took a third off in the low 10s. I took another third off in the mid 10s. And then my idea was just to let the rest of the position ride. So I had a third of my position remaining and was hoping to get a really nice resolution lower. So what I like to do is set a trailing stop. So once we made these local highs here, I keep moving my stop down. When the trade is going in your direction, move your stop and trail it down so that you can maximize your profits. So I was out 2/3 of the position. I set my stop in the 1080s on that final third and actually got stopped out when we wicked above there. So here's another concept that we all need to take some consideration of when we're trading. Just because we get stopped out doesn't mean that the trade is over. There's always potential for more. So if you get stopped out, stick with it. Watch what price does. Let it tell you what it's going to do. If we started to build off of this area, then the trade is most likely over. If we got over VWAP, the bulls are probably back in control. But as you can see, we just wicked above that previous high and then got right back under. So I actually added back that last third once we got back into the low 10s, thinking that, well, it's been weak all day. There's a strong possibility that we're going to get down even lower. So I didn't expect this move here, but it was great to see. It's always great to see when you get these nice, huge washout candles. Stock halted to the downside again. I was thinking that there was an offering, a secondary offering, but I didn't see any news on that. It just sold off massively. So I just wrote it all the way down. And once you get in this kind of position, I'm looking for a break of the 9 EMA for my exit. So once we got to this down into the low, into the high sixes, I took off the last portion. And actually, the interesting thing was I made more profit on that last third than I did on my full position here. So that's another thing to keep in mind. You don't need to have a massive amount. You just need to maximize the opportunity. So that's about it for today. I hope you all learned something, and stay tuned for another video tomorrow. Hopefully I can keep adding some value. And as always, if you found this helpful, hit that like button, subscribe, and hopefully we'll see you again soon.